This week is officially Black Swan Week with another major bank going down. Now you might notice in this chart right here, why is USDT going up and USDC depegging? In this video, we're gonna go through everything that you need to know and what happened early morning on Friday in America. Alright? First things first, Silicon Valley Bank is largest failure since 2008 crisis, billions stranded. Alright, another major bank in the Silicon Valley, literally named Silicon Valley Bank, went down this morning. Startup focused lender SVB Financial Group became the largest bank failure since the 2008 financial crisis on Friday, in a sudden collapse that roiled global markets and left billions of dollars belonging to companies and investors stranded. California banking regulators closed the bank, which did business as Silicon Valley Bank, on Friday and appointed the Federal Deposit Insurance Corporation as receiver for later disposition of its assets. So the main office and all branches of Silicon Valley Bank will reopen on March 13th, and all insured depositors will have full access to their insured deposits no later than Monday. But, however, if you are not insured, 89% of the bank's $175 billion with a B dollars in deposits will remain undetermined. The FDIC is racing to find another bank over the weekend that is willing to merge with Silicon Valley Bank, according to the people familiar with the matter who requested anonymity because the details are confidential. While the FDIC hopes to put together such a merger by Monday to safeguard unsecured deposits, no deal is certain, the sources added. Now, what actually happened to Silicon Valley Bank and why did it collapse? Here, several factors led to the precipitous collapse of SVB. Most of Silicon Valley's bank clients include tech and venture capital companies, in addition to executives for these firms. So, the bank offered relatively higher rates on deposits compared with many larger rivals. To help fund these higher rates, the bank bought bonds in prior years when it was cash rich. But that was before the Fed began aggressively hiking rates, and the venture capital market experienced some turbulence. The value of most of these bonds purchased has declined substantially, resulting in big investment losses. Complicating the situation, the bank kept a lower level of deposits on hand and invested a greater percentage of its capital in order to try and pay its relatively higher rates. So, in order to make money back, they're putting their deposits, customers' deposits, into bonds. Now, without learning its lesson, it continued to pile on and pile on. Now, some have speculated that the bank developed a reputation for having not as strict lending standards. It is speculated that the quality of loans to some riskier venture-backed companies with deposits at the bank has deteriorated over the past year. Many of those firms have come under significant financial pressure as rates have risen and securing capital has become more difficult compared to the low interest rate environment. It recently announced, now this is amazing, it recently announced that it lost $1.8 billion in asset sales. The bank failed to secure additional investment capital and many customers rapidly withdrew deposits. Everything culminated with Friday's seizure by regulators. Now, so you understand what happened to the bank. Now why is it relevant to USDC? Here we go. Circle's USDC endured $1 billion of net redemptions since the bank's shutdown. Alright, so Circle Internet's financials USDC stablecoin saw some $1 billion in net redemptions since Friday morning when the bank, one of Circle's banking partners, was shut down by regulators. Circle burned some $1.6 billion of USDC on Friday, taking out the tokens from circulation as investors redeemed dollars. Circle also minted new coins, adding to the circulation, but much less than it destroyed. The market capitalization fell to $42.4 billion from $43.5 billion on Friday, according to the data. Now, this is bad, right? It gets even worse. Circle confirmed Circle confirms $3.3 billion of USDC's cash reserve stuck at failed Silicon Valley Bank. So 3.3 billion in cash deposits remain at SVB, the bank which was shut down by regulators. The sum represents some 8% of the total reserves backing its stablecoin USDC. Here's the tweet right here. And that is the reason why USDT is going up, because people are flocking from USDC just in case, and they are fearful that USDC might collapse along with the bank. All right. Now, it gets even worse. All right. Coinbase is temporarily pausing USDC to USD conversions over the weekend while banks are closed. During periods of heightened activity, conversions rely on USD transfers from the bank that cleared during normal banking hours. When banks open on Monday, we plan to recommence conversions. So it doesn't get any better for Circle and USDC. Obviously, for the bank, poor investment choice led to this collapse. The cryptocurrency market certainly did not take this lightly. A lot of these are in a sea of red. XRP, Cardano, Polygon, Dogecoin suffering a massive hit. All right, Solana, just a little bit, Polkadot, SHIB. Everything is going down. All right, now please trade carefully. Now you know what happened to Silicon Valley Bank, and now you know what happened to the cryptocurrency market today. I'm gonna see you guys in the next video. Like, subscribe, comment, and peace.